This week, it's time for security money. The index and the NASDAQ diverge. Are security stocks out of favor? We'll dig into that and more. Business Security Weekly starts now.
This is a Security Weekly production for security professionals by security professionals. Please visit securityweekly.com/subscribe to subscribe to all the shows on our network.
It's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly.
Ever feel like your network infrastructure is stuck in the past? Meet Meter, the company reimagining what it means to get and stay online. Meter delivers full-stack networking, wired, wireless, and cellular, all in one seamless, scalable, and secure solution. From hardware design and firmware to software deployment and support, Meter streamlines every part of your network while giving you all the control and transparency you need. Whether you're managing a branch office, retail stores, or a massive data center, Meter gives you performance, reliability, and the visibility you need to stay in control. Thanks to Meter for sponsoring. Go to securityweekly.com/meter to book a demo now. That's securityweekly.com/meter, METER. This episode is brought to you by Adaptive Security, the first cybersecurity company backed by OpenAI. AI has fundamentally reshaped the threat landscape. Today, the greatest risk isn't someone breaking into your systems, it's someone breaking into your trust. Deepfake voices joining your video calls. AI-crafted phishing emails that perfectly mimic your executives. Even synthetic job applicants entering through the front door. Adaptive Security is designed to counter these new realities. The company delivers real-time attack simulations that show security teams exactly what modern AI-driven threats look and sound like, and prepares them to respond effectively. Learn more at securityweekly.com/adaptive. Welcome to Business Security Weekly. This is episode number 435, recorded February 9th, 2026, but will air on February 16th, 2026 for President's Day. I'm your host, Matt Alderman. Joining me for this segment are my two co-hosts. First, Mr. Jason Albuquerque.
Hey there, Matt. No more NFL at this point in time, because we're already fast forwarding into middle of February. At this point, President's Day, I'll probably be up in Maine skiing. So
good for you. Yeah. Football season's over, so I canceled my Fox One subscription because
there you go.
That's the only
no longer
sport
needed.
I watch, so no longer needed. I'll pick it up next fall.
There you go, man.
Yep. Also joining Mr. Ben Carr from the new desk.
Yes, from the new digs. We're in the new house, so yeah, thanks, Matt. Happy to be calling from the new location.
Yeah, look kind of familiar. We've got a good little background similarity going on. Jason said he's not giving up his bar though. So
oh no, whiskey and cigars are not going away, folks. Not going away. I'm keeping with the business. I'm keeping with the Security Weekly traditions.
There you go. All right, one quick announcement, then we'll get into the security money news. Security Weekly listeners save $100 on their RSAC 2026 All Access Pass. RSAC 2026 conference will take place March 23rd to the 26th in San Francisco. To register using our discount code, please visit securityweekly.com/RSAC26 and use the code 56U5 SecWeekly. Hope to see you there. All right, so as you guys know, once a quarter, we go through the security money stuff. So I always pull up my stats, but I noticed a trend. When people go and see this link, when they go to the show notes, they're going to see some interesting graphics in there, and I'll pull some of them up here in a little bit. But what I noticed is the NASDAQ is going this way, and the index is going this way. They're starting to diverge. And it got me thinking, as part of the segment, I'm like, what's going on? And so as we get into this a little bit today, we're going to get into it. And I want to kind of show what's happening. There's like a rotation out of security stocks. Mm-hmm. I think I know why, but let's dig into it. Yeah. So first, we had to make a change. So originally, I thought Netskope was going to get added because of the CyberArk acquisition by Palo Alto Networks. That deal has not closed yet, so CyberArk's still trading. Well, lo and behold, Thoma Bravo comes through and they buy Verint. Like literally a week after we did the previous security money segment. Bought Thoma Bravo,
right.
and then they rolled them and joined them with a company called Calabria. So I'm like, well, that's great. So I had to bring Netskope into the index to replace Verint. So I don't know what's going to happen when the CyberArk deal closes, because I don't think there's any other public companies out there right now. So I need another IPO
Right.
to keep the index alive. Anyways, so I had to rebalance everything this time. So here's where it gets interesting. So the index closed on Friday at 2227.50. It's an increase of 122% from when I started, but it's way down from last quarter. Like it was like 2,700 or something like that. It dropped like 500 points in the last quarter.
Crazy.
The NASDAQ, though, on the other side, closed at 23,031.21, slightly up from last quarter. So that kind of triggered this like, ooh, they're diverging, right? So we'll talk about that here in a little bit. But yeah, the index is definitely, it's down for sure. And then I pulled all the results as I usually do. So let me just run through these numbers quickly for everybody. So revenue beat by 2.7% on average. That's up. Profit beat 25.31% on average. That's also up, and continuing that upward trend. Where I'm seeing the biggest movement in the public trading companies is profit. Profit beats are going up. There's fewer and
I mean,
fewer
that's what I
companies
pulled out of
losing
this
money.
too, right? I mean, this is that whole shift about operational efficiencies and profitability and EBITDA. Like these are the conversations happening versus your top line revenue, right? Because think about it. The revenue side was growth, but only a tiny bit.
Yeah.
Right. It wasn't much of a move. The needle didn't move much. A profit, that's where it's at. So it's that shift we've been talking about quarter over quarter of focus on EBITDA, focus on profitability and operational efficiency. That's what's going to make you shine.
Yeah, for sure. And that's also where you're seeing the performance. So when you look at the kind of the best and worst performing and even the analyst ratings, it's those companies that are driving the profitability. So companies like Fastly and Varonis and Rubrik still performing very, very well. Rubrik, this has been like the third quarter in a row, I think.
I know. Yep. They're just killing it.
They're killing it.
Yep.
Worst performing, OneSpan. They're the only company that missed in the last quarter earnings. They're the only one that missed, right? So again, you're seeing that kind of move to operational efficiency and profitability. Yep. Average analyst rating was 1.78, up slightly from last quarter. It's a moderate buy against the market. Rubrik, best rated. Netskope, just went IPO. Zscaler, again, all pretty solid performers. Worst rated, QLYS, Akamai, and Rapid7. Yeah. And Akamai's again.
Rapid7's been on there a couple of times too, haven't they?
I know.
I think they've been on here a couple of quarters in a row.
You're gonna see why in a minute.
Yeah.
You're gonna see why in a minute. There wasn't an IPO per se, but AuthID announced a closing of approximately 3.675 million registered direct offering. So what's interesting is you have some of these companies that kind of do these direct offerings into the market. And this one was really, really interesting to me because they were already publicly held, but they're small, they're tiny. They offered this direct offering. They priced it at $1.35. I think they use it as a way for some of the employees to get equity out.
Oh, yeah, that makes sense.
So they priced these offerings. You could buy them and then sell them in the open market. And I think on Friday, I didn't pull their last closing price. I think they were like $1.70 or something like that. I'm trying to see what they closed at. Hold on, I pulled up their stock. Yeah, $1.68 right now. So anybody who bought these at $1.35 made a little bit of money or could make a little money by selling them. If you were a director, though, it was the price was higher. It was like $1.70 or something like that. So anyways, just a really unique kind of headline, because you're like, wait a minute, what did they do? They offered up these as a direct offering. Verint was acquired by Thoma Bravo, as we said, and then Thoma Bravo combined them with a company called Calabrio. But then I pulled these two interesting highlights, and then I'm going to go into these graphs. Two companies. So Zscaler did this last quarter. They raised a big post-IPO debt round. Checkpoint and Fastly did the exact same thing.
Yep.
And this is another trend I'm seeing, is companies using public offerings to raise debt and get money from a debt perspective. Checkpoint raised $1.8 billion through a debt round. Fastly raised $160 million. Zscaler's was, I think, around $1 billion last quarter, right? So why? And so when you step back and think about this for a second, look at some of the investments some of these companies are going to have to make in the AI era.
Right.
They're already publicly held. So how do you raise capital in order to make some of these investments? So it looks like they're using debt as a way to potentially fund some of these future investments, is kind of my guess. And I see it elsewhere. We'll see it in the private companies too. There are some really interesting older companies that have been around for a while. They're not raising the next series, they're raising debt. And that again, it's just one of those flags. It's like, why do you have to raise debt? Maybe it's the only way they can get money in.
Maybe.
Anyways, just some interesting trends that I see from public companies. So here's what I'm going to do. I'm going to pull up some graphs. Let me kind of structure these windows a little better and do this and kind of give you an idea of what I'm talking about. So listeners, you guys stick with me. You'll see some graphics here. So this was the first graphic that really tipped me off to something's going on. And that is the divergence between the index and the NASDAQ, right? So the NASDAQ's in red. You see it kind of going up, and it's kind of baseline. But look at what the index did. Look at that big drop.
Yeah.
And when I saw, because the first graphs I put together are the index graphs, and I saw this and I said, whoa, what's happening? There's a rotation going on. But the rotation didn't just start. We're seeing the impacts of the rotation now in the index, but it actually started for some companies pretty early. So let me go scroll over here and scroll down a few and show you some really interesting graphics. So let's go to my favorite company's vulnerability management. Look at that one.
Yeah.
This started in 24, about halfway through 2024.
Yeah.
Okay. You could see a break from the stock in blue versus the NASDAQ. So you could see that there was a partial rotation already happening for the vul management stocks about midway through 24. They weren't the only one. There's Tenable.
Wow.
Almost same time period.
Yeah.
See that? That's a bigger divergence, right? And then let's go to the last one, Rapid7. Started even earlier, rotating out of the stock. Okay. So what you're seeing is some of these legacy systems that are out there have already been out of favor, but you really didn't see the impact of those like you do now. Like, because it's a weighted index, some of these stocks didn't have that same level of impact to the overall index, but this rotation started years ago.
Sure. Yeah. I mean, now I sit back and I say to myself, what was prevalent and happening in 23 into 24? And then I kind of go into the time machine of our conversations that we were having on the show. And we started really having full bore talks around migration to ecosystem, migration to things like Microsoft, who are handling vulnerability management, who are handling endpoint detection and response, who are handling, MDR. So is it that? Is it the big dogs who come in, built out the ecosystems that are starting to steal from these organizations? And now we're starting to see that big divergence?
So let me go to the next set of stocks because there's some interesting news over there. Let's see. You would think so. So here's Zscaler, right?
Yeah.
Look at that.
Oh.
Happened recently, though.
Yeah.
So
yeah,
it was tracking
recent.
pretty well. It's a recent dip in Zscaler.
Yep.
So I think, to your point, Jason, a little bit, you were seeing platform players pick up the slack. Zscaler's pretty big in the index from a weight perspective. So when you see a precipitous drop like this, you're going to see it in the index. I pulled a couple others. CyberArk, not so much, a little bit, but towards recent, right?
Yep.
Varonis happened also pretty recently. Big split here. I've got to find, so I pulled CrowdStrike because CrowdStrike is one of the heaviest weighted. Now, CrowdStrike data doesn't go all the way back to the beginning of the index. They came in 2019. This data goes all the way back to late 2017, actually, when I started pulling all this data. But even CrowdStrike has had a divergence against the NASDAQ recently.
Yeah.
Yeah.
It's interesting.
Very recent, but yeah.
Yeah. So even the heavyweights, CrowdStrike.
Yeah, right.
I think I have one in here for Palo Alto too. You're going to see the same kind of thing from Palo Alto. Where's Palo? I think it's up here. There's Checkpoint, right? Another kind of big one in the weights. And then that's Forescout. That one broke off a while ago. Oh, Palo's over here. Right there's Palo. Palo actually broke out earlier than some of the other ones.
Yeah. Huh. Yep.
Yeah. So yeah, I have all this data. So I spent time like pulling all these graphs together because until you see it at the individual stock level, you don't realize, whoa, this has actually been going on for a while.
Yeah. And happening across the board to some degree. Yeah.
Pretty much across the board. There is not a single pure play cyber company that has not seen some level of rotation out lately. Zero trust is clearly the future as threats get faster, quieter, and harder to detect. But implementing it shouldn't disrupt the business. ThreatLocker enforces default denied execution in a way that remains enterprise-ready, scalable, and operationally clean. Unknown software is stopped cold, trusted apps stay contained, and drift is locked down across the environment. It's zero trust that works in real enterprises and prepares you for the threats ahead. See why CISOs are adopting it at securityweekly.com/ThreatLocker. Right now, with Tanium, IT and security teams complete patching programs in minutes, not weeks. Reduce software vulnerabilities by up to 97%. Cut incident response times by up to 99%. This is not just IT, this is autonomous IT. Making business, your business, unstoppable. Tanium, autonomous IT, unstoppable business. See more at securityweekly.com/Tanium. Most security conferences talk about threats. Zero Trust World lets you attack them. From March 4th to 6th, 2026 in Orlando, Florida, this hands-on cybersecurity event features live hacking labs where you'll break real environments, think like an adversary, and learn how attacks really work. You also get expert sessions, real-world case studies, CPE credits, and networking with top practitioners. And yes, the Security Weekly team will be there too. Don't miss it. Register today at securityweekly.com/ZTW.
So what are our thoughts around that? I mean, is it
why?
Is it the ecosystem players? Is it I don't know. I mean, that's the big thing I can think about. I mean, just in this segment, we're probably going to talk about the elephant in the room, ServiceNow making acquisitions. They're a big ecosystem player, just they're a different kind of ecosystem, right? They're more of that ERP, CRM, like business apps ecosystem. But at the end of the day, this is the second security company they've acquired.
Right.
Second. So what are they planning? One of them was an AI security company and now Armis. It's like, is it these big dogs just trying to take everything over?
Maybe, but I don't see how ServiceNow solves the cybersecurity problem.
No, I agree.
Right?
Yeah.
I agree.
So I don't know that it's that. There was maybe, I'm trying to think of the right words to say, maybe there was kind of an overhyped market up until recently, right? Cybersecurity was kind of the new kid on the block. We saw some really great IPOs with CrowdStrike. We've seen some really great gains with CrowdStrike, Palo, Checkpoint, Fortinet, these large players. But at a certain point, AI is going to disrupt a lot.
Yeah, I wonder if it's more than that, though, because this kind of led some of that AI discussion, right? And if you, I'm thinking now, if you map this into, I don't know that we have any pure data on it, but like what I've seen as far as my own personal experience and people I know in the hiring around cyber right now, it's kind of been the same thing. In the last 18 months to 2 years, there's been a lot of people who have kind of been displaced and, colloquially just, hey, I'm looking for a job. I'm trying to find something. And it's been a little bit more depressed than we thought about it. And we're starting to question, everybody's saying like, there's not a hard time hiring people right now. You can find people if you want because they're out there, right? And I think that matches up here. Is it a pivot away from investment?
Well, my question is, did we over-rotate? Did the market over-rotate and now we're just stabilizing?
Maybe.
That's what I'm thinking.
Maybe we did.
Yeah.
Yeah. Because when we get into the private funding side, if you're doing anything AI related, you're raising money.
Yeah.
Yeah.
If you're not, if you're traditional, kind of old school companies, they're having a hard time raising.
Right.
So I do believe that there's an investment challenge here in the cybersecurity space. I think more resources and investment going into AI. I think that's also taken some of the overhyped security market to the point where people are like, well, maybe I don't want to be that exposed to that market. I want to see what comes. There's going to be a lot of disrupted technology coming around AI. And I'm wondering how many kind of pure play vendors are susceptible to kind of getting blindsided. Even the platform players, potentially.
Yeah, true.
Yeah. It's just super interesting data that I just couldn't ignore because I'm like, something's going on.
Yep.
And it's like I said, for the vuln management, which kind of the more pure play, it happened earlier, but even for the big platform players, it's happening now.
Yeah. No.
Well, that would make sense, right? That would make sense that the pure plays are kind of the leading indicator over more of a platform play with the diversification. Yeah.
Exactly right. Yeah.
I mean, but then I look at it, Matt, and I'm like, the money is still out there, though. Who on the show is dry powder, right? I mean, we talked about it on doing a segment like this before. There's still dry powder out there.
There is.
No doubt. I mean, there's still investment happening.
There is. But it's
a little bit of a wait.
Very
and see.
targeted.
Yeah, they're holding on to that and waiting to see where the investment goes.
AI. There's some supply chain companies in there that got investment, right? Supply chain security type thing. So you're right, targeted. It's very targeted.
Very targeted.
Yeah.
So when you look at the private company funding, right? So Savient, 700 million, been around for a while, big investment. Armis took 435 million before they got acquired by ServiceNow for 7.75 billion.
Yeah.
Right. So again, money's going there, but very targeted. Sierra, 400 million. So you still see some big, you still see big numbers.
Yep.
But they're very 7AI, right? Well, I wonder what they do. $130 million raise.
Right.
I mean, I'm seeing seed rounds. I think Tenzai I'm pretty sure that was a $75 million seed round.
Oh.
Seed.
Yeah, right.
Right? Sweet Security, I think that's their second 75 million tranche. They took some right around RSA last year.
Yep.
Right. So again, these new startups that are focused on very specific things and a lot of AI technologies, they're getting funded. Right.
Yep.
And then you kind of scroll to the bottom of this list, and I kept a couple of them here. So Authenticate, 12 million in debt. Digicert, 9.3 million in debt. Right.
Yep.
They can't raise another round.
Right.
They've been around for a while, so they're raising debt rounds to kind of bridge the gap. And this is what I see. And I talked to some of the investors out there. there haven't been a lot of exits lately, not a lot of IPOs. So the problem with some of these funds is if you're not returning that investment, then you got to reserve capital in your later funds to support those investments if they need it, which slows down the investment cycle.
Right.
That's what's happening. Yeah. I don't know. It's super crazy to me.
Yeah, no, it's interesting. It feels a little volatile, right? It just feels volatile, and investment is targeted, and yeah, I feel like there's going to be even more disruption in front of us in the future. You know, I sit back and I say to myself, you're going to have trouble bringing businesses into this index because so many organizations are either getting swallowed up and they're not pure play anymore. Right.
Yeah.
And it's just, you know, it's one of those scenarios where keeping the index alive is going to be a thing.
It is. I really worry about it. Like Armis was heading towards IPO.
Yeah.
They get snatched up by ServiceNow before they even get to go to IPO. So it changes the dynamics of the market now. Even Wiz, you know, Wiz could have gone public, but no, they got bought by Google, right? And so the IPO market is not a current exit strategy for some of these large companies. And I don't blame them, by the way. Look, as a startup, I don't know that I'd want to go into the public market via an IPO. Yes, look, I work for 2 companies that went public via IPO. But the pressure it puts you under from a financial reporting perspective, it changes. And when you look at, I mean, Rapid7 stock is under $12 a share. It was under 11. Okay. They're like a $700 million company. They are probably on Thoma Bravo's radar to figure out, scoop them up, put them with another company, and then eventually roll them back out.
Send them out the door. Because
their current market cap is like under $700 million. That's like nothing in this space now.
Right.
And so I could see some really interesting moves. Thoma Bravo did it with Verint. I could see one of these guys getting gobbled up, move back private, and who knows what happens to them.
Right.
And that's just going to put more pressure on the index because there's fewer and fewer public companies out there for me to put into the index.
I know. It's going to be a struggle.
I know. Lots of acquisitions still going on the private side. Some were kind of buyouts, like Jamf was acquired by Francisco Partners. That was kind of a swap out. Inky by Kaseya was interesting. That's Ron Gulassi, the company. So Ron was early in Inky on the email security side. Kaseya picked them up, undisclosed amount, but that's usually a good exit for many. Let's see, QLYS by Ping Identity. So the identity space still hot. Data and identity still hot. Upsite Security, which I think is which one was it? Was it that one? Arctic Wolf bought, I think they're an endpoint play. So you're starting to see some of these MSSPs buying technology, buying products
totally.
to embed in their stack. Yeah. That one was kind of interesting to me as well, just because of there's a kind of trying to figure out a pure play services business can get a little rough. So now when you have product in the mix, you kind of balance out some of that service.
More balance.
What do you know about that company that Veeam acquired? Is that AI? Is that an AI company? It's security with ITI?
Yeah, I think so.
Yeah.
I don't remember who they were.
Oh, wait a minute. So their data security posture management.
Oh yeah, DSPM.
Yep.
Again, hot space, data.
Right.
Data and identity.
Which makes sense for Veeam. That makes sense.
Yeah. Yep. Still hot. Mayhem Security, which was that old For All Secure product. That's what they were named before. Bugcrowd picked them up on the application side, which I thought was interesting too. Just some really interesting one. Visa. I think Visa was an AI one. That's the one that was ServiceNow.
Yep. Yeah, they're an AI company.
Yep. Yeah, still some layoffs going on in the industry. Axonius laid off about 10%. Deepwatch, 25% of the company. That's
that's pretty substantial.
Yeah, that's pretty substantial. That one was really, because that's a service-based company. MSSP, MDR services.
Yeah, they were hiring
staff,
not too long ago, like about a year ago, 18 months ago. They were on a hiring spree. So kind of pivot there.
Now, some of these are being spun as kind of AI, kind of AI investment plays. Like we're getting rid of people because we're investing in AI to get better efficiency out of our employee stack. So you're seeing a lot of that kind of verbiage in these announcements, right? Sure. Oh yeah, we're laying off 70 people, but that's because we're getting efficiencies from AI.
It's good air cover.
Salesforce, right?
Yeah. Until you stop using LLMs because they're not predictable enough.
Right. It's interesting times, let me tell you.
Yeah. The market, I mean, if we look at the market last week, like Tuesday, Wednesday, Thursday looked really, really bad.
Yep.
And it was only making all this data look worse. And then Friday, we get one big turnaround and it softens that blow, right? Yep. It's like, could have been because I was preparing all this last week. Yep. As the market was ticking down. Tanking. Tanking. And then Friday, you see this big push, and I'm like, well, that softened the blow. But something's definitely going on in the market.
Oh, yeah, no doubt.
Any other topics in here? Jason, Ben, you guys want to?
No, I think we pretty much hit everything on my list.
Gentlemen, always a pleasure. Thank you for joining me today. Thank you, everyone, for watching and listening. Hope you have a great President's Day. We'll see you next week on Business Security Weekly.